Okay, well, let me just get started here. And what we have here is the Media Moguls Trial Balance Chart of Accounts, and I've expanded this. I've added these additional columns. And for you, the only ones I'm really concerned about you adding are the ones that are through the adjusted trial balance, because all I'm going to ask you to do are the adjusting entries. And if I pop back over here to the adjusting entries, if I can find them here. Here are the adjusting entries for the first month. Now, because we don't have the new truck in the initial trial balance, because that was part of one of the transactions that we did, I'm not going to ask you to do that one in Excel. So I blacked that out on my sheet here. And so just only do the adjusting entries in Excel for these other ones that were pre-existing here. All of these were pre-existing. So we should have about 4 adjusting entries that you would have to do. So let me go back over here to the document now. So I'm only looking at adjusting entries for those 4 items, excluding the new one. And so I'll tell you right up front that the only thing we're doing here are the adjusting entries, so I can see that you know how to do them and bring them across. Now, these two additional groups here, income statement and the balance sheet, those are 2 things that I wanted you to do initially, but I'm not going to make you do at this point. They are meaningless at this point because the adjusting entries and everything that you have are also meaningless because we're not updating these. These are all updated in QuickBooks. If we were to turn around and update all of these after you did your QuickBooks trial balance, then you could do it, but I don't want you to have to go through that. I'm only interested in seeing whether or not you can make adjusting entries for those 4 items and move them over to an adjusted trial balance. I have these out here just so that you could kind of see that in normal circumstances, the accountant would actually have those. They would create in this worksheet your income statement and your balance sheet. Now, I'll walk you through just a little bit of how to do that, but it's not something I'm requiring you to do. I'm just asking you to do the adjusting entries here. So let's pop back over here to the um, let's pop back over here to the adjusting entries. And the adjusting entries, obviously, when you look up here and you see that these things all were like paid, those are just part of your normal transactions. These entries here, and you will do all 5 of them in QuickBooks, these are all done as a general journal entry. Okay, so you'll do actually 5 general journal entries for these to record this depreciation. Okay, now, could you do it all in one entry? Yeah, you probably could, but it's better to keep them all separate because these are actually separate things. Now, in QuickBooks, let me just mention one more thing. When you, back over here, when you actually recorded the transaction for the vehicle, that is going to change. If you were to look at your vehicles, they're going to be now the addition of that 71.5, or in QuickBooks after you've done all this stuff, it'll be 121,500. All right, but since I don't have it in here, the only way I could really deal with it effectively at this point is to treat it as an adjusting entry, and it's not. So I'm not going to do it. I'm just not going to use that. Okay, so getting back to my adjusting entries, and there again are only going to be 4 of them because I don't want you to do this one. You don't have anything to apply the accumulated depreciation to without having a new asset to add as well. So I don't want to do it. Okay, just do these 4. Okay, and if you've already done it and you've already added it, well, that's fine. That's no problem. But I think for most of you, you're probably waiting on this video to be able to do it. Okay, so the first one here, and I've got it as October 31st. And if you changed your dates to January and February, it'd be January the 31st, obviously. So record depreciation for other vehicles, assume $50,000 cost, 3-year remaining life, and salvage value of 5,000. Okay, so let's go back over here and let's do the first adjusting entry. And so if I look down here, I have accumulated depreciation vehicles. That's already established. But what we didn't have is this thing that I created down here, and I did this to save a little bit of time. I created a 510 depreciation expense vehicles. And I'm only going to do one or two of these, so you'll have to do the rest of them on Excel. But so I'm just going to show you how you would do the first one. So we have to have the depreciation, and depreciation, straight line depreciation, is uh, you have to do the formula of assets minus salvage value over the useful life in years. Well, look, we're only doing this by the month. So you have to convert those years into months. So here's the way that that actual calculation would look. Equal, and I'm going to open parentheses so I make sure that they do this part of it first. And it would be 50,000, and you could point to the 50,000 at the top, and probably would if you were doing this in the real world, minus the 5,000 salvage value. And you would probably be pointing to this too, because it'd be on a separate sheet. You'd have a depreciation sheet, okay? Divided by the useful life now in months, and you have a 3-year, we told you a 3-year useful life, so 3 times 12 is 36. And that gives you a depreciation amount on vehicles of 1,250. And again, you had to add this 510 depreciation vehicles. All right, now coming up here, the other side of this is going to be accumulated depreciation vehicles. And I can just say that it's going to be equal to this number. And because it has to equal anyway, it has to balance. All right, so now what I'm going to do is I'm going to show you how you would go about getting to the adjusted trial balance. And this is really what I'm looking for. So when I see your Excel sheet that you're going to turn in, when I see that, what I'm looking for are these actual formulas, okay, that you know how to move it from the unadjusted trial balance through the adjusting entries to the adjusted trial balance. Now, this one, obviously, cash never has an adjustment to it, but it's always best because you have something up here. It's always best to include it in your adjusted trial balance because all of your all the accounts that are over here or that you add over here will have to appear over here. Okay, and so we don't have any petty cash at this time. I don't think I created anything for petty cash along the way even. But whatever you have over here, you have to have over here. Okay, if it's a debit over here, it has to be a debit over here. If it's a credit over here, it has to be a credit over here. Anything that you add in addition, like we just did over here, has to be over here as well. Okay, all right, so the first one, I'm just going to say is equal to this number. And I'm going to do them all the same so that if it's a debit balance account, I'm going to do it the same, whether it would have an adjustment. In the case of cash, it wouldn't, but whether it would have an adjustment or not. So that number, the debit balance amount, plus any debits that we have for adjusting entries, minus any credits that we have for adjusting entries, will give you your adjusted balance. Okay? And now what we would do is we're not going to redo that formula every time. We're just going to copy it down. So I'm going to go Control C and point back to the formula I just created, do a Control C, and come down here. And for every debit balance account, Control V, Control V, as in Victor, Control V, Control V, and Control V. There's one more down here at the bottom because I added this one, right? Control V. And now you notice down here that I've changed, my balance down here has changed, okay? And if I drag this across, I'm only going to get the 12 and a half probably because I'm not going to get anything yet because I haven't done the credit side. So let me do the credit side now. Then I'll start down here with this one. You'll start with wherever your first credit is. Equal this credit balance plus any new credits. Could we add likes and subtract unlikes minus any new debits? And there's your 21.5, which is 20,000 plus 12,250. I should say 21,250, not 21.5, but 21,250. 20,000 plus 1,250. All right. Now you're going to do that same thing for every single one of your credit balance accounts. So I'm going to go Control C. I'm going to come down here in this case, and I'm going to grab, I'm going to do this one, and then I'm just going to grab it and drag it. And so after you do your first one, you probably should check and make sure that you have this same balance, because if you have, that indicates that you've done it correctly. And you always want to make sure that you're in balance after each entry. All right, so I'm going to do one more for you, and then the rest of them are on you. Okay. All right, so let's go back over here and we'll do the depreciation on the building. Building had an original cost of $320,000, a salvage value of $32,000, and a useful life of 30 years. Well, 30 years is going to be 360 months, okay, because we have to do this by the month. So 320 and 32,000. So let's go up here and find, oh, we have to create it, depreciation expense. Buildings. And I probably should have stayed with, oh well, I'm not going to worry about it. I have all caps on the other ones, and just when I look at something like that, my mind just doesn't. My mind rebels because I see that there's a difference. But does it really matter? No. Okay. Equal. Open parentheses. 320,000 was the original cost of the building minus 32,000 of depreciation. Close parentheses, and divided by, and if you wanted to, if you didn't trust yourself, you could just say that you're going to divide it by 12 times 30, okay? But in this case, I'm pretty sure it's 360. So I'm just going to put it in there. And that'll give you $800 worth of depreciation. You've got to come up here and find the accumulated depreciation for buildings, which is right here. So it's going to be equal to the $800 I just created down here. You can pencil it in, it doesn't matter. But the thing is when if you're using it going forward, you'd want to go ahead and do all the formulas that you could so that you don't have to redo formulas each time. And in this case, we didn't have any accumulated depreciation building, okay, to start with. So it's going to be 800 over here, but it'll still be equal to, and you point to that as though there was something there, plus this, and you're always going to do the minus side, even though we know that we're probably not going to have anything there. But the reason that you would do the minus side here, and I'm going to, I don't know why that showed up here, is without the zeros, because it should have zeros if everything else does. And here, we'll make sure that it does. Okay. And so now when I look down here, you notice that if I'm coming down here to my adjusted trial balance, what is happening here? Well, I don't have this 800 over here yet. So remember, anything that you add, you're going to have to add over here as well. And now when I look at the 872, 872, so I know I'm in good shape. All right, so that takes care of everything that I want to talk to you about relative to this. If you do this part, if you do this part of this thing, then you're good to go. And probably one of the first things I would do is I would change this so that it all extends out over all of the cells that I'm going to work with. It's just something that, as an accountant, that you typically would do. All right. So now I want to show you how the income statement would work. All right. We don't have anything out here for our revenue side yet. Okay. But if we did, we would have something over here in the adjusted trial balance. And then so I would go to my first one on the revenue side, and it would pop over here as a revenue, and it would be equal to whatever was over here. In this case, so in other words, if I had, for example, let's say that I had some, which one did I start with here? Oh, here. Let me make sure it's hard to see without any numbers. So if I had 30,000 here, in this case, 30,000 here, then I would have 30,000 over here as well. Okay, I don't at this point, so I don't want to change that because I don't have anything there. But if I had, then that would go over there. All of my expenses would go on the other side, and I would have a difference. And that difference then would be either your net income or your net loss. And that's the way we would do it. On the balance sheet side, we would bring those over just the same way. Here in this case, I would come say that it's equal to this guy on the adjusted trial balance because it's an asset. Over here, I'd have equal to this guy because it's a contra asset. And, and it would go on down anyway. When I would come down here at the bottom, I would have a difference, and whatever that difference is would be the same difference as I would have over here. And it would be either your net income or your net loss if we did it right. But the only thing I'm concerned about here are these 6 columns. And as long as you do those 6 columns and you do all your depreciation right, all I'm going to do is I'm going to come over and I'm going to take a look at it, and I'm going to see that you have on all of the ones that you're supposed to have, I'm going to see that you have these formulas in place. Okay. And as long as you have the formulas in place, I'm going to be good. All right. And so you'll save that as a separate item, and I'll let you upload that as a separate item as well. And that concludes this. If you have any questions about it, remember, let me go back over here one more time. All of these things, every single one of these is going to be recorded all the way up through the very beginning. Is going to be recorded in QuickBooks, every single one of them. Now, somebody asked me if they could do the whole thing in Excel, and I said, yeah, if you want to try to do the whole thing in Excel, that's fine, because there are people, believe it or not, there are people that do their entire bookkeeping on Excel. And so I'm okay with that. And plus, I've already seen some of the work that that person has done in QuickBooks, so I know they can do QuickBooks. I think it's easier to do it in QuickBooks than it would be in Excel. So I'm not going to complain if they do it in Excel because they've actually done more work. But for the rest of you, you probably, if you don't have that already special dispensation, call it, then you want to do it in QuickBooks because, like I say, it's a lot easier. It's only going to take you a matter of probably a couple of hours to do this entire thing in QuickBooks. Okay. But remember, once you get to here, then I want you to do what I really want you to do is I want you to create the income statement. And none of this stuff is right anymore, is it? This one you did. This one's okay. Let me walk down through here. This one's okay. Make the transactions. That's okay. And this one, let's just change this last part to, well, no, this is all right. Create the adjusted trial balance because that's what we did. And create a trial balance income statement, except we're going to do this in QuickBooks. And once you do that, then you can do these other 2 things here, okay? You can do these and just, put them in Excel or something like that, okay? And then once you've done that, then you're going to take screenshots of each one of those, okay? Because because if you don't, then when I look at the next month, if it's not right, then I don't know which month you did wrong, okay? So you could have 100% on month one and then do something wrong in month 2, and then I have a problem trying to grade it, okay? So take me some screenshots and send, and that's what I'll have you load up, the screenshots for your income statement, balance sheet, and statement of cash flows if they have it, QuickBooks. And so you'll just give me screenshots of each one of those and an Excel trial balance showing me the stuff that we just did over here. Okay, so if there's still questions, let me know and we'll work through them. But I think that should be fairly easy for you to understand. And here on this percentage of net income or loss to sales. Um, that one you can just do in just do it as part of this thing over here. Okay. So, and the way that you could do that is just come down here and make a thing down here somehow. Merge center, word wrap, and just start out and say, okay, the percentage of income, net sales was X. And then do the next one. Okay. And And then, so I have all of that right as part of this Excel sheet. The next one, the current ratio from beginning to ending. Remember what current ratio is, right? Current ratio is equal to current assets divided by current liabilities. And so your current assets up here. And remember, the main thing that you need to remember here is when you get down here, all of these notes payable that are current, those are all going to be part of your current liabilities. Okay. These down here that are the non-current portions, those wouldn't be. So in terms of liabilities, okay, if there are any of these um, current ones, those would be your liabilities. Okay, everything actually from this one right here through all the currents. And then up here, you only have those are your current assets. Okay. All right. Well, I hope that that is self-explanatory now, or hope that that clears up any problems. If not, give me a call and we'll fix them.